Welcome to a brand new wave, drowning out the noise that's tame. Liberty whispers through the brave, breaking free from every chain. Nullify the rules they crave, crypto beats that pave the way. Anarchy with minds that's safe, algorithms new dawn today. Out of bounds and out of sight, building futures pure and bright. Escape the grip and win the fight. Welcome into the legacy ride. Beyond control we take a stand, casting off the iron brand. Freedom flowing through our hands, revolution's our command. Decentralize the way we plan, all together we expand. Breaking shackles for the clan, in this journey we're unpanned. Out of bounds and out of sight, building futures pure and bright. Escape the grip and win the fight. Welcome into the legacy ride.
Sneaking in before he gets here. We're back for another week. The weekly legacy, everyone. Legacy Right live, YouTube, X, Rumble. Catch us wherever every Friday at 11 a.m. or around that time. I know we're a little late. I am the legacy of Jennifer and Kaiser. I'm Zachary Kaiser. I'm your captain upon this voyage, this great voyage into the unknown of knowledge and conspiracy rabbit holes, because we try to piece the puzzle of why bureaucracy wants to contain you into a sense of dependency. And we've been talking about the last couple weeks the social engineering factor of behavioral economics and how the CFPB, the Consumer Finance Protections Bureau, uses exactly that. So, without further ado, let me introduce you to my compadre, and let's jump in and dive in to the latest of the legacy right.
It's
Welcome
the
in,
greatest.
Andrew.
What's going on?
I see that you say jizz behind your
It says
behind your
whiz.
shoulder. Whiz, jizz. Oh, even better. Whiz.
Yeah.
Are
It's
you
an old
peeing or
shovelware game for the Super Nintendo. It's a
you're such a
platformer.
nerd? You're a dork.
I don't think anybody's gonna know what it is, but hey.
You just explained it.
Yeah, I know.
It's an old shuffleboard game.
People
for
joining
Super
in, they're not gonna get
Nintendo
it down
nerds.
2 minutes down the road.
Probably not. So, first off, how's the week been? Anything new? Anything extraordinary in the highlights of the week? I can't really think of anything besides Trump's big State of the Union.
It was quite interesting, but it was kind of rehashing.
It was kind of stupid and WWE like. The villains are the minority party now, the Democrats. Give it a couple years, maybe. if anything, 4 years, and we'll be right back to the same thing where the Republicans are the enemies of the state and the minority. So Trump is still a Democrat. Everybody.
Is this a pivot for the next 40 years? The Republicans run the Congress and the House and have the White House.
Yes.
Democrats had the last like 40 years.
So the next 40 years, it'll be a Republican. So are we going back to post Civil War, where the Republicans actually did run the White House and Congress for the most part for nearly 30 years?
It's retrograde, man. We're going all the way back to the Articles of Confederation.
I was thinking we were going all the way, but we were just going to pivot back to where the Republicans take the mantle of communism that they were founded upon. But, before the big split of 1912 between the half socialist conservatives and the complete progressive communism of Teddy Roosevelt, that led to the communists gravitating towards the party of power and utilizing the useful idiot in Woodrow Wilson. Woodrow Wilson was not a smart man, but he was useful. And it swung the door open very wide for another Roosevelt, who was a blatant Bolshevik.
Large and in charge, huh?
So, but I guess it's time for the communists to backpedal and head back to the party of their original choice, which they found, the party of warring states, autocratic rights violations, and Lincoln Heights.
I was thinking Otto von Bismarck, but okay.
I mean, Bismarck certainly held the standard model of how socialism is very successful. So, speaking of socialism, though, we have been discussing the Consumer Finance Protection Bureau and its administration of behavioral economics, on the concept, the theory, the psychology around social engineering aspects to life in general, both financially, economically, but also just culturally, because everything is stored from an economic standard from the market to society is how we build our culture, right? If we don't have a market, if we don't have goods and services, if we're not innovating, producing, consuming, then what do we have in life anyways? So what is the purpose of life? So we're on page 20 of this PDF. This nice descriptive piece that entails the story behind what the CFPB is all about. Let's rehash for those who haven't watched the last couple weeks. Of course, Weekly Legacy 5 you can find on Rumble, as well as if you dig into my Twitter, deep into the highlights. And then you can also jump into the podcast sphere, Apple, Amazon. You can watch the video format just like this, or just do audio over on Spotify. But Weekly 5 is where we started. We went over some videos, kind of defined the idea of behavioral economics and social engineering before we dove into this last week on the Weekly Legacy episode 6. So with that, let's kind of rehash it for a summary. What did we discuss, and what did we learn from last week for the first half of this PDF?
Well, to put it as narrowly as possible, we had a functional economy that we were proud of, well, at least to a degree, and the CFPB, they decided we're going to go for prestige, and now we're on the downward path to dysfunctional economic progress. Hey, William, what's going on? That's the most narrow way I could define it.
So basically, this second half of today, almost said tonight, so it sounded like tonight. Tonight, it sounded like a southerner straight from South Carolina. We're gonna go after the minerals. We're going to Ukraine for the minerals. So welcome to South Carolina. Speaking of South Carolina, that's where Andrew's at right now. I'm doxing you. They already know you're in South Carolina. Where? Where in South Carolina? But anyways, that's basically where we're coming from now. So we've distinguished why and for what purpose the CFPB has. Now we're going to venture into the idea of what. We've done the why. We've even done the how. Now we're doing the what effectively.
Everyone, put your helmets on. We're about to venture into Elizabeth Warren's head. It's a dark, dangerous place.
Dude, we're
there's nothing
retards,
there.
but we're not that fucking stupid.
Are you all ready?
Let's dive in, baby.
Okay, I'm going to do a little retrograde here and start at the beginning of the page, even though we stopped at the bank and credit fees. Probability of default on home mortgages in their study, Jen and Kudliak show that states with recourse laws in which lenders have greater opportunity to recover the principals of their loan by seizing additional assets tend to have lower default rates, particularly when the value of the home is greater than $500,000. In other words, incentives matter. But this runs counter to the belief that consumers are not responsible or responding rationally to their choice context. See Wright 2007 for additional evidence in this vein. So the CFPB ignores it or even represented it inaccurately. Okay, now we're going to start. I left off. Bank and credit fees. Another source of ire for advocates of consumer protection is the various fees charged by banks and other creditors. These range from fees for transmittance to overdraft protection to various add-on features employed by credit card companies, among others. BLE researchers it's a little hard to read. Sorry. Prefers a number of rationals in support of highlighting heightened regulations. For example, following Gabex and Levinson 2006, Barr, Grill, and Bubb 2012 argue that many of the fees that credit card issuers assess, such as late fees or over-the-limit fees, are shrouded or non-salient costs, and so are largely ignored by consumers when selecting or using a credit card. Similarly, BLE scholars have argued that those who use overdraft protection excessively, more than 10 times per year, must be subject to certain behavioral biases that cause them to irrationally overuse the product, such as optimism bias or any other innumerable biases reported in the literature. For example, in the marketing by credit card issuers of certain add-on products such as credit insurance, which pays a consumer's credit card bill in whole or in part in the event that he or she becomes unemployed or suffers certain other calamities. In July 2012, the CFPB warned credit card companies about these services, stating that credit card issuers have employed deceptive promotional practices for marketing the products, including failing to adequately disclose important product terms and conditions. Following this announcement, the CFPB fined both the Capital One Financial Corp and Discovery Financial Services, claiming that the companies were using deceptive techniques to lure consumers into purchasing services that they otherwise would not have purchased. Unsurprisingly, the immediate result of this action was a dramatic shift away from these services, with the major institutions such as J.P. Morgan Chase Bank, Bank of America, and American Express pulling out altogether of the credit protection market. American Express spokeswoman Marina Novella explained, "We are very sensitive to the concerns that the regulators have, so we're pulling back." Kevin McKennick, head of the American Bankers Insurance Association, went a step further, hinting that at the CFPB's underlying tactic of choosing best marketing practices. "I don't want to ascribe to them the belief that they want to pick winners and losers in the market," but he added, "We may have to revisit that question in the future." Deltree 2012. In a similar vein, the newest target of the CFPB is overdraft fees. These are fees banks commonly charge customers with overdrafts for their account. These fees constitute a significant source of revenue for banks. Further, the services to which they are tied and are valued by consumers who need quick access to credit that might otherwise be unavailable. The CFPB's interest in the area has sparked the same kind of recoil generated by its condemnation of credit card add-ons. Richard Hunt, president and chief executive of the Consumer Banking Association, a trade group of big and regional banks, has said consumers have the right to choose the products and features which best provide for their families' daily needs. Quoted in Douglas 2013. The CFPB approaches the issue with a focus on the burden these fees place on the presumably unaware consumers. In a white paper released in 2013, the Bureau argues that these fees can constitute costly services that are less beneficial than other services banks offer, such as linked accounts, i.e. accounts where a savings account or credit line is used to backstop overdrafts. Despite previous regulations that stipulate banks must allow consumers to opt into these programs, Willis 2013 claims that these types of services remain in the marketplace largely due to the machinations of banks themselves, which subtly coerce their customers into opting into overdraft protection services. Following Willis, Bub and Pildes, I guess that's pronounced, recommended that stronger intervention be pursued through direct product regulation. We echo Florence and Zwicky 2013 by first pointing out that any services is costly in a literal sense, assuming services are not free. The larger question is whether the service is in the least costly opportunity available to the consumer, and if the consumer is aware of this. Flores and Zwicky show that those who most often overdraft are more likely to opt in to overdraft protection. This would be a somewhat banal observation, except for the fact that the CFPB claims that this is evidence that a small percentage of consumers are taking on unnecessary burdens for engaging in this service. Of course, one could say the same about people who purchase flood insurance. Constant use of the services alone is not indicative of irrational behavior, particularly if it's the best option available. A question for the CFPB has not addressed is whether these consumers actually have access to the more attractive opportunities they claim are less costly. If banks do not typically extend credit lines to frequent users of overdraft protection, or if these persons do not have as much in the way of savings, their overdraft fees may be the least burdensome way of accessing short-term credit. Yes.
Let's stop there and let's mention about overdraft protections. To a certain extent, I understand the concept of wanting to protect the consumer in frivolous banking institutions and creditors from taking advantage. But at the on another notion, the human consumer, the human being, has to adjust and adapt to the risks that are involved within any type of market. And that market can include the banking industry, which is highly regulated as it is. And yet you still have people that are duped into this mechanism. Now, Andrew would end up chiming in at this point and be like, well, it's kind of hard when you have one monetary supply. True. But you would still have these issues even if you were to have competing like currencies, or uh, in the manner of like a sound economic value system. Say the banks are depositories; they can only lend monies out, certificate notes, et cetera, based upon like the gold that they hold or the silver that they hold in their depositories, right? So let's take a minute and discuss a little bit about the overdraft fees. So obviously we are on a fiat system. The idea of overdraft is more new as well as nuance in recent day than it has been in our past. And I'm only talking America right now. We're not going to go to the rest of the fucking world. We are Americans. Like, we're talking about the CFPB here, which is an American bureaucracy, an American protections bureaucracy.
The bracket.
But racket, whatever. The mafia needs to get theirs. But what are the good things from, in your opinion, of the overdraft protections?
Well,
Let's just start
some
there.
people have no impulse control, and so it's really beneficial for them because of the way their personality functions, that they have these things in place. Not to say that
So
it's a universal thing, but it is a fact of psychology that there are people who have absolutely no impulse control at all.
So what you're saying is it is somewhat of a benefit for those who have no impulse control on spending, those who get captured into the allure of predatory lending, and so you have these protections in place that government comes in and regulates the banks, regulates the credit card companies, regulates the mortgage brokers, etc., to stop them from certain practices that prey up on those that probably shouldn't be lended to in the first place. So
Anna
it's to
Nicole
stop.
Smith,
And Anna, yeah, and Anna Nicole Smith, God bless her
$1 million
soul.
credit card.
Uh,
Not 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 to put down somebody
no,
who's passed away, but I mean it's just an example.
I mean that is an example. I mean, but there is a benefit to a certain extent because there are people out there that are stupid enough to, and yes, I'm going to say stupid enough to fall into the entrapment of what lenders love to thrive on. Their favorite consumer to their lending practices, to their loans, to get in trouble with debt and owing is those that really shouldn't be taking out a loan in the first place. But on top of that, most banks don't really want people, most banks, I should say, most banks, most lending brokers, they're they're not going to be in the practice of going after those who actually can't pay back the loan. This is more of a target to these payday loan schemes where your next day loans, your get money now type of scenarios, which is literally loan sharking that has jumped up rapidly in probably the last 20 years. But they've been around. So there is a significant point of protection for the morons that get reeled in by predatory schemes.
There's another way to put it. Look at it is this. Yes, what I was talking about before, no impulse control. That is a fact, but that could be cover fire for some private organization or some shadow organization, whatever you want to call it, deep state actor that is trying to filter out their 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 financial transactions in a way that it's just to protect their interests without actually getting caught up and being have
well,
a spotlight put on them, like the thing with
well,
USA.
yeah, and that would be a benefit. I mean, people are assets, right? People are resources. So the interest would be the citizen. So you want to protect your investment investment as best as you can. So I can certainly see that. But let's let's note some negative effects though, for that government regulation, the quote unquote overreach. Why would this be an overreach of government regulatory measures?
Because it doesn't actually help anybody in the realistic term, and the fact that it's it's designed to do one thing, but it actually delivers a different, endpoint solution.
Yeah, so effectively it's allowing for um,
It's smoke
people
and
with
mirrors.
yeah, it's smoke and mirrors, but it's allowing for uh, people in these practices to focus entirely on being allowed to go after the morons, and these morons to continue to rack up all this debt because that's just a system of play that we're in today, and both sides are effectively protected, so you
Yeah.
can continue to play the game, the debt game.
Yeah.
So in reality, there's really no consumer protection. What's thought of as being a protection for the consumer ends up inadvertently being a protection for the institutions, the lending institutions of these loans, of these credit schemes, et cetera, because everybody's going to be subsidized in any manner. So the predators can continue to prey upon the morons, but the morons are able to continue to impulsively go into debt and not necessarily have to live by the consequences of going into debt by being in debt.
Yeah.
So,
And adding fuel to the fire by creating additional credit day in and day out, because it make it so you don't have an option otherwise.
fair point. Let's continue on, my brother.
Okay, just a second. Uh,
I'm
there
going
would be no
backstage.
okay.
By
There would
by
be
the way,
no.
everybody, this is the Andrew Joseph show. So take it away, Andrew.
I'm the whiz. I'm the whiz. There would be no reason to rely on a consumer's irrationality as the culprit behind utilizing overdraft services. See Zawicki 2012b for a rational choice-based take on overdraft behavior. Unfortunately, by targeting these types of services, the Bureau is likely limiting credit to those with even less attractive options. Consumers sometimes face desperate choices. There is no. This is not a matter of choosing between a cheap option and a costly option, but instead between a costly option and a very costly option. Bank analyst Dick Grove goes on, so far as to say that these limitations of credit practices can send consumers to such shadow banking institutions as the mafia, Benoit and Zibel 2013. As the Wiki 2011 argues, regulators cannot wish away the need of low income consumers for credit. If your car's transmission blows, you need $2,000 to repair to get it to work. Whether or not you have it is saved in the bank, and most low income Americans don't. If you can't get a credit card, you're going to have to get that money from a payday lender, a pawn shop, or a loan shark. In response to these concerns, the CFPB has made great efforts to explain that it is not banning these practices, and the reality, though, suggests otherwise. While an outright ban would certainly constitute a more explicit form of burdensome intervention, putting the screws on banks for practices that previously were considered illegal increases the implicit cost of using targeted services. At some point, it no longer is worth it to risk the ire of the agency. Instead, the market is left abandoned with little regard for the consumer's true interests. Federal Reserve economist Durkin and Ellihausen 2012 reported in a Federal Reserve bulletin that consumers are actually quite satisfied with the credit protection services. This findings comes from a properly controlled survey of households, i.e., not self-reported, on a variety of credit services. In contrast to the CFPB's interpretation, the Fed authors concluded it seems that the marketplace offers consumers a choice concerning the purchase of debt protection products, and consumers exercise that choice as part of their financial decisions uh, about borrowing. While there may be abusive practices among some lenders who operate outside the realm of ethical behavior with respect to the sale of debt protection products, survey our survey evidence suggests that, in the view of consumers, such behavior is not the norm. You want to jump in here, Zach, or should I keep reading?
What you want to go off of? Because I mean, I
I
can.
just didn't know.
We kind of distinguish the overdraft. I mean, the only thing that I'll add is one thing that you mentioned in the what's mentioned in this is the keyword mafia, um, and that's effectively what government regulatory mechanisms end up becoming. They end up being, for as good as they might be perceived, they eventually erode into the negative effect of mafia building. And you have to protect the scheme of those that want to contain some sort of power. Anytime you give up an authority to a figurehead, an organization, whatever, for your safety and your protection, rather than protecting yourself through your choices and understanding consequences through those choices and trying to quell yourself from making poor choices,
Yeah.
you're going to enable another person, another organization, et cetera, to expand that and attempt to keep that power. And the only way to keep that power is through a force of violence. You're protected from extortion by being extorted. Does that make any sense?
Prestige is
you're
a trade-off.
Yeah. So the trade-off would be, well, I want to be protected from these rackets over here in the private realm of everyday life. So I'm going to I'm going to surrender my every being of natural righthood to this public racket over here. So it's a catch-22. You're going to lose regardless. So we got some comments from William. So we should move to a cash-based system from credit-based one. Yes and no. I think the cash-based that William would be interfering is the blockchain, so P2P. But yeah, a cash-based system and not really necessarily cash, because cash is a dirty word because it's all fiat, it's all fake. There's nothing back. It's just paper. But it's better. It's a better case scenario than a credit digitized system, where you're tracked.
Lick your fingers.
So, but yeah, don't lick your fingers. There might be some cocaine. Actually, in today's day and age, there might be some fentanyl on it. But at the same time, a privacy apparatus of P2P, whether that would be cash based, whether that would be just trading in some sort of trading in some sort of bartering system, my good for your good, or my service for your goods, whatever, what have you. Getting into the blockchain, utilizing tokenization, Bitcoin Cash, et cetera. I mean, anything that is more private.
Clean burning, just like propane.
So, yeah, it's clean burning like propane. Like, yeah. So, walking my German Shepherd on trails and listening, that sounds awesome.
Yeah.
I'm gonna do the same later. I'm gonna go head down to the hills of Kentucky. The good life.
It is a good life.
So it is a good life. Experience nature. I always said, actually, before we continue on, Andrew, let's get off topic for one quick moment because of that comment right there. What is your perfect vacation? And in fact, I asked this because Mike Decentralized actually tweeted this out yesterday. But what is your favorite vacation spot, or your essence of a vacation?
Man, I mean, it's not so much that I have one vacation spot, is that I would probably have a enclave of different locations that I would just kind of travel to every 6 to 12 weeks or something like that, and just stay there for a while maybe, and then go to the next place. Every place has got its function.
So you want anywhere something that's different from home, escape home, get some peace, some clarity, allow yourself to just be away from the hustle and bustle of life for a moment.
One place is to go read. One place is to write. One place is to relax and watch TV and play video games. One place is to go skiing, hike in
You
the
ski?
mountains. I'd like to ski
You like to ski? And maybe
eventually.
maybe down the road we'll meet each other in like the white or the green mountains up in like Vermont, New Hampshire.
Where's Zach?
We'll go.
There was an accident.
Yeah, and that's maybe not. That's the time you'll probably get away with murder. Uh, so honestly, by that point, I don't really care, man. I'm just here to enjoy life. So
Right.
if you wanna murder me, Andrew, go right ahead. I give you my permission. So,
It's right there on
but
video.
but to go to that point, yeah, it's right there on the video. To go to your point on that one though, that's mine. My favorite vacation spot is anything there is nature where I can be uh, enmeshed in the peace and the serenity of God's earthly realm. God
Mm.
created us. God created everything. God created the beasts. God created our nature. And anytime you can escape man-made hell, um, the structures and the zoning practices of just straight up concrete trash, hell, and get into nature. That's my favorite, man. I'll go 5 miles down the road to or 10 miles down the road or whatever to Versailles State Park, or 30 miles to Clifty Falls, or I'll go 100 miles, 200 miles to the Great Smokies, or wherever, anywhere there's nature, man, where I could just get out there and hike and walk and explore. Um, I like going to battlefields too, man, because they're all preserved. Well, where they're preserved, and there's a conservation practice, so it kind of sucks because you don't get, unless you're like in like uh depending on the season you're in, where you actually get to see the battle, it's conserved, so you're with nature. So nature is kind of taking root back. So anywhere that I can be around nature, take a hike, walk, breathe in fresh air, and experience God's gift to us all, which is the earth, is my favorite vacation. That could be
You heard it here
Florida.
first. He's a nature
Go
boy,
ahead.
ladies and gentlemen.
I'm a nature boy. Yeah. Woo! But yeah, that could be Florida, that could be South Carolina, that could be Tennessee, Kentucky, Indiana. Lately, I've been just going all across Indiana.
Mm.
So, but anyways, let's let's go, let's go cash based, because there's no basis of usury because it's all private. I said that in jest. My favorite vacation is remote in Ted Kaczynski's cabin with internet. But with internet.
Yes, have to have the
We
internet.
we you heard it here first, everybody. William is possibly Ted Kaczynski, but with internet. But
And
let's dive back in. We took our little break. Let's dive back into student loans.
here we go. Another
Woo!
target for the woo. Another target of the CFPB is student loan markets. The CFPB is limited in how it can address student loans, since it has no jurisdiction over public sector lending and education. That authority instead belongs to the Department of Education. In fact, only about 15% of student loans originate from private organizations. Deltree 2013b. Nevertheless, the CFPB has targeted this sector repeatedly, once with a report in July 2012, and then more recently in May of 2013, using the oft-repeated observation of the immense burden of student debt. The CFPB reports that students are given a few options to defray their burden by private lenders, suggesting private lenders employ a combination of easy repayment strategies, such as those offered by the government-supported loans, and debt consolidation utilizing the historically low interest rates currently seen in the markets. The agency does not, however, address how lenders can restructure their market to offer these attractive rates in practice. Deltree 2013. See. To understand the structure of private lending markets, one must consider the incentives of these loan markets in its private loans. No private loans that are subsidized by taxpayers, lending institutions like Sallie Mae, the market's leading private provider of student loans, off the hook when a loan goes bad. In these cases, offering attractive repayment options at a reduced rate makes sense since Sallie Mae wins either way. If the buyer pays back the loan at a reduced rate, then Sallie Mae recoups part of the loan agreement. If the buyer is still defaults, then the government picks up the tab. Hence, public lenders face a far different opportunity cost of serving loans to their private brethren. Any serious comparison must take these divergent incentives into account. Because private lenders have no such agreement with the government, they incur the entire loss of a loan if a loan goes bad. To compensate for this risk of default, lenders rely on good loan recipients to subsidize the bad. In other words, debtors are paying for not only the risk of their own loans, but that of others' loans as well. Without this arrangement, it is unclear how private lenders would be able to deal with the number of defaults found in these sorts of markets. This point exposes a flaw in the CFPB's argument that after students graduate, find jobs, and begin to establish a repayment record, the risk of default declines, and so they should become eligible for lower rates. Carnes 2013b says. In fact, many borrowers probably do effectively refinance into lower interest rate options such as home equity loans and prepay their student loans. But leaving that aside, while it is true that the risk of a particular borrower has decreased, the overall risk in the market has not. The very nature of the product is that there is some cross subsidization from borrowers who make their payments to offset the default losses for those who do not. Thus, requiring reduced interest rates for the results of such a practice would almost certainly force private lenders to increase rates even more for initial borrowers to increase upfront costs, such as charging. It's hard enough to read this as it is, and you keep messing with it. Thank you. What was that? Thus, requiring reduced interest rates for the result of such practice would almost certainly force private lenders to increase rates for initial borrowers, to increase upfront costs, such as charging origination fees, to alter other terms, such as imposing more severe default rules, or to restrict access to the higher risk borrowers, such as low-income borrowers who are probably most in need of access to higher education credit. The broader purpose of the CFPB's efforts is apparently to pressure lenders to write down part of the debt incurred by students. The result of such pressure, as we saw with the credit card debt insurance and overdraft protection, will be to limit the market for student loans from private lenders, driving more students to public lenders, or driving them out of the higher education completely. Again, the agency is attempting to select the outcome of choices, as if there is simply a menu of options with which a more focused, public-spirited entity could manage the affairs of the market. The reality is that the agency can only tell consumers and companies what they cannot do. It simply has no control over what will come next, as consumers and companies try to adapt by making do with what is left on the table. In the case of student loans, clearly that entails greater public loans and taxpayer subsidies. You jump in here, Zach, or do you keep going?
Let's just showcase a little bit. I asked Venice AI about student loans and if it is a racket by both the banking and government industries Yes, that's right. I called the government an industry, a parasite, and an industry of parasitism, which I would include the banks as well. Um,
It's a corpse.
and if it's but is it a racket? Is this government banking partnership a racket to increase and maintain dependency on the government? And this is actually what it gave me, which is very, very interesting. Let's zoom in a little bit. How does that look, Andrew? I'm not on the StreamYard screen. I need to get a second monitor. Um, but anyways, this is what it says. The student loan system in the United States can be seen as a government and banking racket that maintains dependency of the plebes, average citizen, as it serves the interests of lenders and the status quo rather than education and well-being of students. There's no argument there. And here are some reasons why of what it lists. I'm not going to read off the description, but usury and predatory lending. I think we've already established the predatory lending scheme, which would include the excessive fees, charges, the high interest that accumulates with student loans, which also leads to a guarantee of government subsidy, and I mean, which creates costs that skyrocket because whenever there's a guarantee in the market that people are going to have money to afford this service or that good or whatever, then you're going to uphail the price. You're going to increase that price, um, because you no longer have the audacity to experience a supply and demand realistic motive. You get what I'm saying? You lose the
Distortion.
transparent you distort it. You distort supply and demand. Um and so like you have the lack of transparency and accountability, even though the government's there to regulate and bring accountability, right? The student
Yeah.
loan industry is often opaque, making it difficult for borrowers to understand the terms and conditions, which nobody reads anyways, of their loans. And that can be defined in almost any loan at this point in today's day and age. And take the student loan crisis um, as a means to expand on that terms of service nonsense, that legalese, that manipulates people. The lack of transparency can lead to borrowers being misled or taken advantage of, which leads to this excessive fees, charges, uh, people being late, people having to default, but you can't default with student loans as well. You can't
No.
file for bankruptcy, so you really can't
Public
default
student loans.
high, well, public, but most. That's the thing. It forces people to go into that public system of student loans for which is ran by private lenders, but you can't get out of those loans by defaulting and filing bankruptcy. Um, Dependence on credit reporting agencies, basically, you're going to be fucked for the rest of your life, essentially, because of your payment behavior. You can't pay back those loans, or you're stuck in that debt. Then good luck trying to get yourself an apartment that's feasible. Good luck trying to get a loan to purchase a home. Good luck even being able to finance a brand new vehicle, especially now without a cosigner, and even that might be difficult. Profit driven interest, especially within the private realm of the heavily subsidized student loan industry. Um, some key players to the student loan racket includes obviously commercial lenders. And it names Sally Mae, Navient. Sally Mae is more public than anything. Government sponsored entities like, the Federal Family Education Loan Program, direct lending programs, um, the credit reporting agencies, that track your credit history, your payment behavior, and And then the colleges and the universities themselves. I mean, many institutions of high education have become increasingly expensive because they're playing that cost approach. I mean, the more money going in with more debtors, more credit that is being expanded, and thus we gotta make profit somehow, right? So increase in price. So to address these issues, some potential solutions could include income driven repayment plans, which there are certain aspects, not on the public aspect of student loans, free and debt free college programs. Don't really like that aspect because that's just forcing the taxpayers to pay for coastal elites. Um, in this country or in Germany and Norway, just the elites in general. So that's just socialism, public banking, financial institutions. Establishing public banking and financial institutions could provide more affordable and accessible financial services to student borrowers. What do you think of this, Andrew?
I was trying to find the quote real quick from Mises. He's talking about, once somebody's into the market, it doesn't do them any good to try to keep people out of the market, because the whole purpose of getting into the market is to provide an upper hand to somebody. This is just a very, sloppy
Mm-hmm.
quote from him, because I was trying to
Yeah.
find it real quick. But, it's actually counterproductive of, in the fact that it actually it limits his potential growth as well.
Mm.
So, like I said, I was trying to find a quote. I'm
Well,
sorry.
no, you're good. Speaking of probably leaving the market be and not being counterproductive to the productivity of, fixing your mistakes. Regulatory reforms, and it says here, strengthening regulations and oversight of the student loan industry could help prevent predatory lending practices and ensure the lenders are held accountable for their actions. I agree that that lenders need to be held accountable, but lenders need to be held accountable to people, to those that are actually consuming these programs within the market. And that means you probably need to stop with the regulatory output or the regulatory input um, that is causing an output of too much oversight, because I think that is where that's the issue that we're at right now, is because there's so much oversight that nobody cares. It's just
Yeah.
become one big for-profit scam, both publicly and privately, and the government, uh, on all levels, but specifically with the federal level, because most of these public student loan programs are federal, appropriated downward onto the state level and into your local level. Um, I think the only way to strengthen regulation is to deregulate and allow the market to dictate and allow healthy competition, so that people can start seeing through the lens of these predatory practices, and maybe start realizing, hey, this company is preying upon my child, upon my
Right.
family, upon my behavioral payment practices. And perhaps I need to look at this company who seems like they are trying to keep the costs low and have a lower interest rate. And it's easier for me to pay back. And they're actually giving me an incentive to where, hey, here's a 0% APR if you pay back the loan in 6 months or 10 months or 12 months or 18 months. If you continue to pay and you're never late, and you're able to pay it back, you're not going to have to pay interest. And we do have systems in place with a lot of programs like this,
Yeah.
few and far between. And but it starts with deregulating. That's how you strengthen the regulation, is by deregulating. Enough of the regulation, because we all know that regulation doesn't do a damn thing. And
Yeah.
that's basically my piece right there, brother. So let's jump in and dive into, what is the next section?
It is departures from the BLE framework, section
Oh,
5. Uh, We now move to the
Fantastic.
final challenge.
Fantastic.
Even if BLE is sound in theory, hey Sean,
Welcome,
it may be
Sean.
implemented
Welcome, Sean.
through a real-world bureaucracy and political system that is subject to its own distortions and biases. Moreover, the CFPB is unconstrained by the usual checks and balances that have evolved over time to temper the pathologies typical of bureaucracies. In this section, we will outline how the actions of the CFPB depart significantly from the policy prescriptions of the BLE framework. Thaler and Sunstein's core arguments is that consumers benefit from better choice architectures. Their assumption, though, is that a public entity like the CFPB can create a better architecture through political channels. While their treatment of the challenges this potential effort faces is notable, the reality is that political conditions undermine the feasibility of such an effort in practice. Departure 1. Consumers are just as bad as making public choices as they are making private ones. Thaler and Sunstein claim that introducing transparency into political decision making will
Vote harder, baby.
Yes, exactly. Thaler and Sunstein claim that introducing transparency into political decision making will alleviate the potential for political biases. Unfortunately, this is simply not the case. When Thaler and Sunstein do not account for it, rather ironically, is that even if consumers are rational and biased in their private decisions, they are even more so in public choice context. As Kaplan 2007 has argued, consumers acting in their public roles as voters are not only ignorant but tend to irrationally support initiatives that end up hurting them in the long run. There is plenty of debate about why consumers are ignorant in their public roles, or even how pronounced their ignorance is. Nevertheless, claiming that watchful consumers will keep politicians in check is somewhat utopian, really. If instead we assume that consumers of public services are largely naive about the values of these services, then it follows that the political process is subject to manipulation by special interest groups, the so-called public choice problem as noted above. The reason going back to the seminal work of Menker Olson, 1965, is that special interest groups have a particular involvement in political decision making, while every man is mostly unaffected. Thinking about this relationship in terms of benefit costs analysis, consumers usually pay very little for one particular government service. So while consumers are as a whole represent a Goliath-like being, the rational choices depend on others to make decisions on their behalf, as becoming informed is simply not worth it. Therefore, it stands to reason that small groups will have a disproportionate influence over public outcomes. For example, the authors of the Fed study on complex mortgages cited above find that unemployment rates and lower interest growth levels, both associated with rural areas, previously contribute to delinquencies. Morian et al. 2013. Put another way, the very area that they excluded from the CFPB regulations, rural banks are more likely to be in need of it, thus leaving aside the wisdom of the underlying policy itself as a clear case of political triumph. Efficacy has led the CFPB away from both its purported goals and the policies prescribed by the BLE pentagram. Coincidentally, Curran and Sunstein, 1999, provided another reason to be skeptical of consumer oversight. In their law review article, they explained how consumers can be caught up in the availability cascades, which causes the public to erroneously blame the most immediate causes as opposed to the more complicated reasons behind crisis events. In the case of the financial crisis, there was clearly a rush to put the blame on the banks for offering improper loans to naive consumers. See Foote, Gardari, and Willen, 2012, for an overview and debunking of this narrative. Despite studies that discourse that discount this explanation, the public can hardly be trusted to weigh the evidence objectively. This is especially so when the politicians have an incentive to exploit and even stroke public ignorance for electoral advantage. For example, Congress established an official blue ribbon financial crisis inquiry commission to investigate the causes of the financial crisis, but then enacted the Dodd-Frank financial reform legislation months before the commission submitted it to its report. Curran and Sunstein even go so far as to argue that bureaus should have institutional barriers, such as a mandatory cost-benefits analysis, peer review by other agency, and congressional oversight to reduce the rush to judgment. Zawinski, 2012, pointed out early in the CFPB's life cycle that the Bureau's insulation from institutional oversight will cause bureaucratic mischief. Curran and Sunstein insisted on insight contributes to this point by showing how consumers could be a source for bureaucratic missteps as well. Put another way, reducing a bureau's insulation from institutional oversight not only exacerbates internal mischief, but also allows for external mischief as well in the form of overwhelming popular encouragement of what is the end of what in the end are questionable solutions to complex problems. The irony is that the CFPB is not only especially prone to populism, populist alarmism, but it is itself arguably a product of such available cascades. Smith and Yandel, 2014, Chapter 6, explained how the CFPB emerged from the financial crisis as a means of dampening public sentiment over the government's bailout programs, which largely targeted supply-side considerations. In this sense, the CFPB places consumers' anger, since the CFPB placates the consumers angry over a highly complex chain of events that was the 2008 financial crisis, and further allows for future policies that assuage public sentiment, ensure safe mortgages, targeting annoying credit card fees, and protecting student debtors from aggressive lenders are all issues that resonate with the public. They may even be beneficial to consumers. Nevertheless, popular sentiment is hardly an effective gauge of efficient reorientation of such complex sets of transactions. Moral outrage may be coupled with, or even better yet, overcome by rational considerations. Let such measures end up harming the very consumers that they are supposed to protect. Jump in here, Zach? Or do we keep going?
Is there anything to discuss? I mean, let's go ahead and delve into the next departure 2, and then we'll jump into BLE, expand upon let's expand on it right now. BLE is actually behavioral law and economics. It's an approach to use the law effectively in all branches towards how we as human beings make decisions, how we comply to those decisions, and as well as the laws and the regulations in place that kind of contain our decision making and influence. There's obviously, whenever you have law and regulatory measures, you're going to have enforcement on it. But the key concepts of BLE is to articulate why human beings make the decisions that they make. That's plain and simple. It's literally just utilizing the concept of normal everyday human behavior and containing it in a central authority of law. One thing that on the legal aspect that BLE is applied is obviously through tax policy, obviously through enforcement of the law, regulatory measures, which would be held up within a litigation practice of the courts, And another aspect, and I think the only aspect, is contract law. And the thing about contract law is, on a natural or common law scenario, you don't necessarily need this positive law oversight admission of extra regulatory movement, because people go into contract with one another in an everyday basis. Contracts can be, it's better to be written, because you have a documentation, but people go into contract every day of our life in today's day and age verbally. You make an agreement with your neighbor that, hey, I'll mow your grass if you in the fall shovel out my driveway.
Right.
You handshake it, you make a deal, and there you go. Now only the only problem with that is, like, say you mow your neighbor's lawn all summer, and then you get a very bad snow and you can't get out of your driveway, and you end up having to do it, or maybe you can't because you don't have the tools, you don't have the shovels, you don't have the blower, you don't have anything, and you expected your neighbor to do it, and they decided to renege on the handshake deal. It's harder to uh, mediate that concept because there's no written record. So that's where you do want to document, right? So that you can
Yeah.
have that, you can solicit that mediation factor, which you don't necessarily need public courts for anyways. We've always had arbitration. We still have arbitration. There's always something called mediation, and all litigation is mediating through a public sector court. So, with the long arm of the law. So that's pretty much a rundown of what BLE is. Let's move on. We'll discuss more on how
Well,
departing, unless you have something to add.
I do have real quick. Um,
Go ahead.
I'm sure the audience knows, but just in case, uh, they implement these frameworks, these ideas as to how to operate without even doing a test run, right? And in a private business, that wouldn't fly. Look at Ethereum, right? They have a test net where they test code, make sure there's no bugs, because there's a lot of money on the line. There's a lot of pressure for them not to screw up, because they're implementing their interpretation of what monetary law should be. There is no test net with the BLE. They just do. And if there's a bug, if there's unintended consequence, sorry, you're out of luck. It's like the meme goes, I go now, or I turn now. Good luck, everyone else. So,
I mean, that's just life. And a lot of people don't understand life, mainly because of all these different strategies and loopholes, and you're protected. And I'm all for protection, but at the same time, you really
there's
it comes down to one thing. You can only protect yourself. You can only protect your family in one means. And in the financial and economic realm, it is you and only you. It's through your choice. You have to understand consequences. Don't take unnecessary risks if you can't afford to take those risks. If that
that's
means
what
you have to
insurance is
live,
supposed to be about, and they're the people that are supposed to be designing the insurance, and they're not even
yeah.
doing it effectively.
Well, that is the problem with the insurance industry anymore, is because of the high regulatory output of subsidy guarantees. You have created a parasitic system of cartels where you have few and far between, not a whole lot of competition within the insurance realm. It doesn't really have an incentive to truly protect you, because it needs to protect itself as well. I mean, you have a whole lot of high premium, but where do you think all those high premiums come from? It's coming from all of you. It's coming from me. It's coming from
It's
Andrew.
a
It's coming
numbers
from
game.
every one of you watching right now. I mean, we're paying in to have this insurance to protect ourselves in any capacity, whether it's life insurance, whether it's your home, whether it's your auto, etc., to be protected financially in case something catastrophic happens, emergency situations. But then other people who get into those situations who can't really pay back what they can. Who do you think is paying out that those extra fees? Who do you think is actually paying? Like, let's go on to medical. Who do you think is actually paying besides just direct tax, Medicare and Medicaid? It's all of you that have insurance. You're being taxed on your payroll. You're being taxed while at the same time your insurance is also being taxed, and they're adding that extra tax into consumption of your premium, and and then on top of the fact that other people have shit happens, so other people have to file claims as well, so everybody's claim, it's literal, like, insurance really is communism. It's the collective.
I mean,
The collective pays in, and that's fine
it's
on
gambling.
that matter, but it is gambling, exactly, and that's what
It's just a
that's
really
what
legitimate
hell
form because everyone agrees that it's okay. Just like, we agree to inflation.
corruption. There is no law, so corporations pay to have the legislation be written for their benefit. There is no law. Exactly. Legislation is
Bobby,
vague,
wow.
so three-letter agencies can write policy and force their policy. There is no law. Like Andrew just said, lobby well, man. Who do you
Getting
think
this camera
writes
guy?
these laws?
Let's
The
play
camera
that
guy,
video.
the camera guy is out there smoking a cigarette, and let me go fire him. So get back
Right.
into it. I'll be back, man. Oh, yeah. I'll
Okay.
be back. I'm gonna go fire the camera guy. Continue to the next departure 2 point of BLE.
Okay. We got 10 pages left, guys. Bureaucratic incentives.
Hold on.
Okay.
Ah! You're fucking fired.
Bureaucratic incentives contradict the assumptions contained within the BLE framework, but it is not enough to recognize the difficulty bureaus have in dealing with consumers and special interests. We must.
Sorry, guys. I had to fire myself.
Oh, okay. You're fired, Zach. It's not enough to recognize the difficulties bureaus have in dealing with consumers and special interests. We must also take into account the interest of the politicians and bureaucrats responsible for actual political outcomes. This constitutes a powerful point often made in political economy, and one that BLE is a pentagram totally ignores. Public officials have their own unique set of interests that are somewhat independent of the policy goals prescribed for them. Consider the parameters of the CFPB's operation. Niskanen? I don't know. I don't speak Italian. 1971 articulates the now well-known principles that bureaus tend to grow larger, not smaller, over time. This is already evidenced in how the CFPB has approached the area of student loans. While the CFPB's efforts to have focused on private lenders, it is clear that they want authority over public lenders too. In a rule proposed in March of 2013, the agency sought to oversee non-bank student loan services. While it did not name any services in particular, it did include any company servicing more than $1 million accounts, which would, of course, include the largest servicer, Sallie Mae. It is unclear as to, at this time, whether the agency will be successful in this endeavor. What is clear is that the agency is seeking to grow at a greater pace than its original mandate allowed for or anticipated. Carnes 2013. Also, bureaucrats often become entangled with the firms they attempt to control, labeled the capture theory of regulation, Stinger, in 1971. The Stinger. This entanglement can occur for a variety of reasons. It may be that regulators are too dependent on the expertise of regulated firms when determining appropriate policy solutions, or it may be due to a revolving door between the private firms and the public bureaucrats, which involved in cycling between the two as their careers progress. While it is far too early in the CFPB's development to see ample evidence of this, one fascinating anecdote is worth noting. Raj Date, who served as the deputy director of the CFPB during until early 2013, exited the agency in order to go into business for himself. What is intriguing about this move is that Date is going into into the area the CFPB is attempting to curtail, that of unqualified mortgage loans. While the industry is downsizing its involvement in this area, Date claims that the area is underserved and that the risk is manageable. He's also taking several former CFPB officials with him, including Gary Reeder, the Bureau's former chief of staff, mortgage service expert Chris Hospital, and Mitchell Hotchenberg, a former regulatory lawyer within the agency, Zebiel 2013. With his unique inside knowledge of the decision-making process within the CFPB, surely Date has an advantage in determining how to skirt the boundaries set forth by the very bureau for which he used to work. He will be able to expand an area of mortgages leading to that bureau and it is attempting to contract. Putting aside the questionable ethics of such a move, this demonstration that actors within public bureaus cannot be counted on to always uphold the values put forth by their advocates. Finally, transparency is a curious assumption to make of a bureau. Self-interest public officials often will only act transparently when appropriate constraints are placed on them. Given the CFPB's independence from congressional oversight as noted above, we can assume that transparency is not obviously forthcoming. Indeed, in an otherwise fairly supportive report on the CFPB, the Bipartisan Policy Center 2013 maintains that the CFPB lacks transparency in much of its decision making. For example, the CFPB does not publish its hearings in the Federal Register, the official journal of the federal government. It also gives little in the way of advance notice of its hearings, which nevertheless can affect large portions of the financial sector. It fails to consult primary stakeholders in large number of cases. The report states that the CFPB should not, whether an appearance of practice, grant preferential access to one group at the exclusion of another, but should instead emulate the transparency practices of other federal agencies by allowing a robust participation in regulatory efforts by both consumer groups and regulated entities. Lack of transparency not only dampens bureaucratic accountability, but also biased decision making, as we will now show.
I just want to add this right here. Sean says, I guess going further, you could say that that's the way it's supposed to be, talking about the law. Talking about his initial here. I should have started. Wow. There is law, but it's just owned. Way it's supposed to be, but it is supposed to be owned by the people and has been taken over by a wealthy few due to corruption. Now, me being a spinnerite, yeah, that's right, I called it a spinnerite. I would go on and say this is exactly correct. A wealthy few took over, co-opted the law, for which only pertains towards the masses, because everybody, those in control, can get away with it. Everything. There's always loopholes. So I would say the Constitution is exactly that. It is a charter that fulfills the needs of a wealthy few who contain a minority control over a humongous majority.
it's funny because if you think about it, it's like the Princess Bride, right? You go in, you take over the ship. You're Dread Robert for a while. You train your replacement, and you leave. Make off with the money. Everybody thinks that you're Dread Pirate Roberts, and then you know you switch the crew out, and then somebody else is Dread Pirate Roberts. And the same thing happened with Team Executor, which is like a hacking group. They pulled that, and they would switch out different owners privately, and just reuse the name. So it's the same thing with government. It's just an instance. It's a period of time. We're here to make some money, and then somebody else is gonna pay the bill.
What do they call that? They call that buying the dip. Buy low, sell high.
I thought you sold high and bought low.
Oh, that's what I said. Buy low, sell high. What? Yeah.
Yeah, I know.
Oh, you flipped it. Whatever. You're fired.
I know.
I'm gonna start over. No, you're rehired, man. I can't read Ant.
I can. Bureaucrats are themselves susceptible to behavioral biases. To put it mildly, proponents of the BLE significantly underestimate bureaucratic bias. Thaler and Sunstein appreciate that choice. That choices do not take place in a vacuum. Context matters. Sunstein 2013 even says that a behavioral public choice would provide would prove useful in supplying the field with the means of understanding potential biases on the part of policymakers. But to date, the vein of analysis is left almost totally unperused. Barragan 2011 exposes this lacuna. Lacuna is an analyzing behavioral study performed in the last 10 years in the top 10 journals in economics to see just how behavioral theorists would treat political institutions when offering policy prescriptions. He specifically asks, A, whether the author offers explicit policy prescriptions, and B, whether they incorporate political institutions into the model / experimental design. Let's go back to the thing about the Ethereum and the test network. The criteria for this latter element is fairly wide, as he only looks to see whether they apply their findings to the political actors themselves. That is, whether the politician is cognitively limited in the same manner as everyone else. Bergen finds that 20.7% of behavioral theorists offer policy prescriptions in the leading journals. He further finds that 95.5% of the articles offering policy prescriptions do not apply to their analysis to the politicians themselves. Nevertheless, a public choice architecture remains to be uncovered through which any correction to private choice architecture must emerge. Surely, one of the most dangerous biases of public officials is the presence of confirmation bias. As pointed out above in the context of complex mortgages, the CFPB is already susceptible to these biases. It claims that it claims to use evidence-based decision-making, notwithstanding. Instead, the Bureau seems to more appropriately employ the method of policy-based evidence-making, relying on self-reported claims of consumer fraud should not be constructed as following the scientific method. Those who report claims are not randomly selected from the population of consumers of financial services. Those who go through the trouble of actually reporting issues probabilistically speaking represent the tail end of the distribution. Only at the CFPB are self-reported survey instruments considered credible sources of opinion. Glasser 2006 provides additional evidence for this consideration. He models choices architecturally across two corresponding contexts, one public and one private, starting from a position of behavioral symmetry across the two contexts, and then introducing certain institutional parameters to establish the capacity for bias in decision making. He outlines three cases where the capacity for error is androgynous to the private or public context. and finds in each case that the public context is likely to be generate more errors, not fewer, than the private context. These results were primarily due to private actors having a greater incentive to discover and correct errors than public actors. He maintains the flaws in human cognition should make us more, not less, wary about trusting government decision making. The debate over paternalism must weigh private and public errors. Cooper and Kavchik, 2012. Sorry, I don't speak Italian. Expand on Glacier's work by showing how policymakers are particularly subject to myopic behavior and inertial tendencies and confirmation biases. They point out that while market actors are subject to offsetting signals, policymakers have less in the way of ongoing explicit feedback than that would reveal these shortcomings. We know that politicians make errors in systematic ways. See, for example, Sobel and Lesson 2006 for a discussion of various biases displayed by the FEMA response to Hurricane Katrina. What makes this notable in BLE and foreign policy areas is that policymakers are no longer subject to the same evidential constraints when determining the efficacy of their efforts. Wright, 2011, goes so far as to claim that the shift in government activities is in paradox with the traditional standards of the older welfare economics approach. That is, if consumers are not presumed rational, then their revealed preferences are largely irrelevant in the ascertaining the value of their choices. Yet the welfare tradition, which guided benefit cost analysis, is founded on just that claim. Once we remove the plank, the preference for the consumer are scattered to the wind, and to be replaced with those of the government's bureaucrats. You want to join in, Zach? Oh, keep going.
Man, do we need to keep going? I think we could probably decipher what the next departure is.
Yeah, it's only 6 pages.
So yeah,
do
you want to keep going, or do you want to try to decipher all of this right now?
Well, we got a half hour. I think we can get 6 pages in, but it's up to you.
I don't know, man. You're kind of boring reading.
Yeah, I'm sorry. I'm up for Retard of the Year on Retard News on X.
Yeah, Retard News on X, everybody. Good job. Actually, go follow at retard_news on X for all your retarded news. And let's spread the message. So let's dive into it, right? You've read it.
Yeah.
I want you to articulate it into your own words. I know it's tough, but I'm gonna be like a university professor now. I'm gonna make you say it in your own words. Summarize it.
Well, I mean, effectively, they're trying to get off on a right start, but they're failing miserably.
I'm gonna stop you right here, dude. Communism. Greatest thing ever. That was a joke because I'm the university professor. No, go ahead. Continue.
Right. No, they're incompetent, and they think if they keep, mixing up their regulations and, distributing it, they're going to better maybe cover their tracks, and somebody else can be to blame for the errors of the, this horribly designed social experiment.
What makes it a horribly designed social experiment?
Well,
I think it's a fantastic social experiment.
There's no control. There's no control group. There's no,
there's a control group. The control group is all of us.
Everyone, yeah. Well, that's what I'm saying. We are both playing on the same pages, but they're constantly changing the rules for everyone.
Well, that's going to happen. But yeah, the control group is just compacted in as one great big grouping. Like there is, I mean, I guess you could theoretically say there's no group A or group B, so there's nothing to compare to. But at the same time, we have history. They have history. I mean, the control group could be how did the Soviet Union rise to power so quickly? How did the Nazis? How were they able to consolidate their own power so easily? And so they're taking concepts. How was Rome able to become Rome in its sense 2,000 years ago? So the control mechanism, the control group that you're comparing and contrasting to is historical, and you take it to present day, and this is how they're kind of maintaining their order in this chaos. So I think it's an excellent social experiment because I think it proves that people are not truly ready for liberty. They want
You serious?
mommy. They want daddy.
I mean, it does talk about paternalism pretty significantly in this.
Yeah, they want daddy more. They have mommy. With all the
And they can
single
go to
mom
Europe.
households. They can go to Europe. What's in Europe?
Well, I mean,
Single dads.
it's pretty paternalistic over there right now.
It is. It is. But
We're trying to kick our welfare moms to the curb.
so yeah, I mean, maybe we should just get back to becoming whole again. Europe, or actually Europe, when were you whole?
Prior to World War One.
Were they? I don't think so. There's always been that one parent.
I mean, look at the long history of Europe's had a lot of fighting, and then there was this significant period of peace, and then it's a little romantic war. It'll be fine, and that just would destroyed everything, their whole identity. Again,
all this fighting in Europe just kind of shows that there might have always been a lot of decreased testosterone in Europe. I blame the French.
That's an easy call.
Yeah, I blame the French. But how do we take it from what we read? How do we divorce ourselves from this social experiment?
Well,
their social experiment. Create our own social experiment.
They dissolved the foundation of the social cohesion we had with the sexual revolution, and they didn't replace it with anything, and they've been just experimenting here and there because everyone's so distracted. Maybe we could actually counteract that like we're doing right now with pivoting with Bitcoin and crypto in general, and create something that's actually functional to compete against the central bank.
That's a fair point, because it all comes down to the monetary system. It really does. Economics rules everything.
The sexual revolution was a result of social engineering.
Sexual revolution peaked, honestly. You had the 60s, but it truly peaked and expanded, if you really want to think about it, about 1971 in this country. Oh, I wonder what happened in 1971. Could it be that Bretton Woods was ripped apart and then renegotiated? Could it be
temporarily
that
taken off the international gold standard?
Yeah, yep. Could it be that the United States needed to propel something to show that, hey, the dollar's still worth something by utilizing this fiat certificate for oil, and in cohesive alliance with the oil bearing countries of the Middle East, and in a Western oil cartel.
Could be. I don't know. I just
Could
work here.
could be. Yeah, could be a lot of geopolitical shenanigans going on with the fiat money. And
Yeah.
then you have expanded social decadence because you have desperation.
You outsource the responsibility to the government, and that way people come to the churches and they say, "Well, go to the government. They'll regulate society. They don't. There's no responsibility."
You don't need to be responsible. If the government can be responsible for you, you can't.
Paternalism.
You don't. Yeah, you don't need to. You don't need to grow up if mommy and daddy are willing to pay for everything and let you live in the basement while you drink beer and smoke weed and play Minecraft. Not gonna lie,
It's for
Minecraft's
everyone.
kind of fun, but I don't see the point. I can understand where kids these days are coming from, though. It's an intriguing game. So, but yeah, I mean, don't worry, man. You can have your health insurance. You can have dad's health insurance until you're 26.
I got 2
Obamacare,
years.
everybody. But that's where we're at. That's a control mechanism. It's creating dependency, taking away responsibility. And without responsibility, what purpose do we have to live in this life? Why do you think
They muddy
suicide? No, go ahead.
they muddy the waters to make it seem deep, right?
Mm-hmm. I mean, why do you think suicide rates have skyrocketed? I mean, since the 70s. Why do you think suicide rates and drug usage skyrocketed during COVID? Oh, whoops. Anyways, a call for a return to pre-mud flooded Tartaria. Retartaria. I like that, Jeff. We need to come back and grace ourselves with real retardation, not whatever the fuck this retardation is. So, but retard news at X at retard news on X. Everybody follow retard news. Scrolling right there, right at the bottom of the screen. So anyways, we got 6
my name
pages
up.
left. We got a roughly about 20 minutes till we hit that 2-hour mark. Would you like to do the honors and read, or would you like to try to wrap up here? And
I'll try to read it out. We'll see what happens.
no, get ready for the Italian. You're on board, Mr. Italian.
BLE fails to provide policymakers with alternative explanations of consumer behavior to overcome confirmation biases. Thaler and Sunstein recognizes that bureaucrats are not perfect, as we outlined above, but argue that they are they are privy to a greater level of experience or expertise and information than the average consumer. Putting the opportunity for political mischief aside, and we rely on this expertise as a sufficient constraint on biased decision making by the bureaucrats. The evidence the CFPB offers leaves us skeptical. For example, the CFPB insists on plain vanilla products and simple mortgages implies that an inability to recognize a heterogeneity amongst consumer tastes. But this is in itself a byproduct of the BLE framework. Once we remove the assumption that consumers are rational, that that substituted schema for adjudicating rational decisions relies on a narrow vision of what some idealized consumer would want. Furthermore, this reductionism severely limits the role of the empirical evidence in judging the underlying soundness of the framework. Once the idealized consumer is constructed, real-world choices that diverge from this framework are dismissed as biased, while confirming evidence, if any, is automatically weighed more heavily as is supportive of the underlying BLE model. The intervention recommended by Bubb and Pildes, 2014, noted above, is a particularly striking example of this tendency within the BLE thinking. Zawinski, 2013, recalls that one of the examples that they stressed following Willis was that the Federal Reserve's adoptions of rules requiring bank customers to opt in order to receive overdraft protections for point of sale and ATM debit card transactions. One stated purpose of this rule was to protect heavy users of overdraft protection, those with more than 10 overdrafts per year. Nevertheless, after the rule was adopted, heavy users of overdraft protection were those who were more likely to opt in as a result, as noted, which is entirely consistent with the standard economic analysis. For Bubb and Pildes, however, the failures of the policy to change the behavior of heavy overdraft users was instead interpreted as evidence of how deeply irrational those consumers are, necessitating a still more forceful government measurements in order to bring about the desired result. In short, Bubb and Pildes has created a non-falsifiable hypothesis. Once the central planner has decided that a certain consumer behavior is irrational, the continued persistence of consumers in that behavior is seen as further evidence of the depth of the rationality. For example, of overdraft protection is especially telling. Therefore, because the consumer behavior is so strongly supported by the hypothesis of standard economic behavior, namely that consumers use overdraft protection rationally, is in light of the constrained options that they face. Zawinski, 2016. As we noted above, the possibility that the observed behavior is inconsistent with the model's assumption of rationality should at the very least be addressed, if not accepted, as evidence that consumers are acting rationally. To serve as a viable policy-making framework, BLE has been able to account for alternative explanations for consumer behavior. This is particularly important given the knowledge that policymakers are already subject to the confirmation bias. Glazier's work, along with Cooper and Basic, I'm sorry, like I said, I don't speak Italian, is just a start in this regard. This is not to say that all behavioral prescriptions are null, but for surely there is still great potential for improving choices. But it does call into question the effectiveness and practice of policy prescriptions generally without offering alternative explanations for consumer behaviors. Departure 5. Experts can never know as much as the market can in guiding consumer behavior. Another problematic assumption made by the BLE framework is that of information and expertise. Thaler and Sunstein argued that while no one is perfect, experts are better positioned to make sense of the difficult choices consumers make. We don't dispute that experts have something to say, so be sure this would be a somewhat self-deprecating claim. We do dispute, though, the idea that experts can even know enough to fully understand the choices confronting consumers. Information retrieval of financial decision-making is not trivial tasks. Consumers approach financial decisions for an indefinite number of why are you doing that? Indefinite number of perspectives. Sorry. As we saw with the complex mortgages, consumers may be tricked, but can also do the tricking. In similar vein, Brown and Platch 2006 surveyed consumer financial behavior and the use of credit cards and find that credit card holders who pay off their monthly balances tend to have more credit card services, not fewer. In other words, there is no indication that these services they are simply to trick consumers into a raw deal. Which perspective is right ignores the fact that multiple perspectives can be held at any one time when looking at consumers' behaviors as a whole. The best the expert can do is try to get the best information possible into each consumer's hand. even proponents more aggressive BLE, even proponents of more aggressive BLE style approaches recognize the limitations of generating intended responses. Willis 2013 points out that when firms oppose nudges, they respond to change dramatically in a way that is difficult, if not impossible, to predict ex ante. And if behavior does not move the intended direction, and it is hard to argue that consumers' welfare has been improved, at least according to the perception of the BLE. Why are you playing music again? Are you having fun? Okay, I'll get back into it.
No,
Or not.
nobody's playing music. What are you talking? Are you schizophrenic? Are you hearing voices,
I'm hearing
noises, music?
Oh,
I
it's
think
hearing
you are.
voices. I don't even think I'm on a podcast right now. This not even a PDF here.
Let's get this finished.
Yeah, it's got 3 pages. Lack of
Or you're fired.
I've always been fired. Hey, I'm not getting paid. Lack of appropriate information leads to heavy-handed policy shoves. Yes.
Andrew just said he's not getting paid. So if everybody wants to help Andrew out, DM him at AIConan90 and donate to his bald head fund. Bitcoin Cash is acceptable. Pay for the man. He needs a toupee.
I had a cat, but it scratched my head, so I stopped using that. Anyways, lack of appropriate information leads to heavy-handed policy shoves. It is in fact because of this deficiency in information that policymakers are more likely to be heavy-handed than at least some BLE advocates prefer. Both Willis 2013 and Bubb and Pildes 2014 point out numerous cases of BLE policies gone astray. But in light of these failure to generate intended outcomes, the advocates are even stronger intervention. Much of this reaction seems to emerge from frustrations with the result not syncing up with the underlying BLE pentagram. And a telling comment, Bubb and Pildes claim it is hard enough to regulate firms when they are congenial with behavioral advisors, and that nudges such as disclosure mandates imposed on lenders in the wild are likely to be even less effective. The author may yearn for a utopian world under the control of behavioral policy advisors, but the environment in which policymakers actually operate involve a far more complex network of marketplace exchanges that even the most aggressive type of behavioral intervention would render controllable. Wagner, 2007, makes the case that markets and public organizations resemble more of an entangled network of interests than a streamlined causal mechanism, with public organizations moving market organizations in the right direction. But put another way, it is not as if public organizations act first and then private organizations respond in predictable fashion. Instead, you have a network of competent private organizations tied to various public organizations, such as the CFPB, which anticipate and respond in unpredictable ways to policy, while at the same time attempting to offset these changes by appealing to other public organizations like Congress. Reorganizing that policymakers operate in this more complex environment offer a more pragmatic perspective on the nature of political change. Public organizations like the CFPB cannot simply reorient consumer choices in the direction they want. At best, they can only remove operations from the consumer's choices set. Even then, it is difficult to anticipate how both consumers and firms will react to these new constraints. As we noted above, consumers in dire strait may not even have the luxury of securing credit in favorable terms. Despite many desperations may force consumers to pursue riskier options. Removing these options then does not solve the underlying dilemma. It only pushes the consumers to even riskier options. For example, a loan shark. Unfortunately, these these unintended consequences have done little to assign the Bureau's tendency to handpick market solutions rather than serve as a source of guidance. This tendency for the CFPB to attempt to control market outcomes makes sense when paired with the point made above regarding informational retrieval. Creating a rule that enables all consumers to make better choices is quite possibly not feasible. The amount of nuances required, along with the omniscient understanding of choice contexts for all consumers, is a burden no bureaucrat will ever surmount. So instead, policies are used as bully instruments. While this may pacify public servants, it makes life difficult for those who have to make life choices in a newly restricted domain of credit services. This is perhaps why, contrary to their more aggressive behavior, Thaler and Sunstein, also quite clear in their assertions that a choice should be improved, not controlled. Thaler and Sunstein, 2008, 251 through 54, they optimistically believe that the bureaus will feel the same, but instead the CFPB essentially bullies firms into choosing the market services that the bureau itself endorses. Whether this is for the best of the consumer is it's left up to debate. That it departs from the BLE pentagram sets up by its progenitors is not. We've got the conclusion here. We'll let Zach jump in real quick if you would like. Okay. Just a second. I'll go back to reading. Conclusion here. We have shown that policy departs from the prescriptions of the BLE largely due for the context of public choice. Like Thaler and Sunstein, we encourage the development of better choice architecture, but to passively assume that this can be generated by the political process is to limit the very science that informed us of the needs of better choices. Instead, we must consider a choice architecture in both the private and the public context. We therefore echo Bergen's sentiment that BLE is much in need of a completely complementary behavioral political economic framework. Theorists should not assume that the policymakers will automatically follow through with their suggestions, especially when these suggestions can be used to do more harm than good. Instead, the set of assumptions applied to private choices should be applied to the public choices as well. Behavioral theorists have a comparative advantage in understanding the potential for bias in choice. It is high time that this was applied to the realm of politics. Also, autonomous consumer choices should receive greater priority. Regulatory bodies inevitably have an effect on the services firms choose to offer. So, still, a less antagonistic approach would allow for consumers to choose from a wider variety of options. And as Click and Mitchell, 2006, argue, paternalism intervention is likely to be more error-prone in environments with heterogeneous goods like consumer credit. The CFPB is best placed as a resource for guiding consumers to accurate information on financial products. As it is the derivatives from this function, it is ironically lost control over the choices context consumers face, forcing consumers to pursue even riskier options. Echoing arguments made by Cooper and Kovacic. That's like I said, I don't speak Italian. 2012. We believe adversarial review by an independent body of experts, possibly housed elsewhere within the Federal Reserve, should inform the analysis made by the Bureau. Policy suggestions by the CFPB could be vetted by this body, which could then offer an opinion that may or may not coincide with the conclusion of the CFPB. We noted several instances of this above where members of the Federal Reserve have come to conclusions contrary to those of the CFPB. Clearly, the capacity for balanced debate exists. It's only a matter of utilizing these services. Furthermore, the CFPB should apply more rigorous data collection procedures, such as those used in the survey conducted by Durkin and Eisenhower. Self-reporting bias is a well-known flaw in survey design, where those with extreme opinions tend to dominate the observations. A randomly selected sample from the population of those who use credit instruments would better inform the agency about the true opinion of existing credit services. Any foul play discovered should be balanced against the benefits of the average consumer report. On the last paragraph here. Finally, the CFPB structure should resemble more closely with that of comparative agencies, such as the Federal Trade Commission or the Securities and Exchange Commission, both of which are bipartisan commissions and subject to congressional oversight. By making the agency so autonomous, all the difficulties and problems outlined above are only exacerbated. Consumer choice is an area that the government should tread lightly. Better institutions and accompanying institutional analysis can go a long way towards achieving the goal of the BLE. And like I said, this all references from that point.
Well, there we have it. There we have it. So, bravo, everybody clap for Andrew. He is the reason why we are damn close to the bottom in literacy. No. That was very insightful. So, and glad we had a narrator. But in conclusion, let's go ahead and chop down their conclusion because I don't like it. Yeah, I don't. I mean, in conclusion, I think it's time to deregulate the regulators. No more data collection. They've collected too much data on us. They're manipulating us in every parameter of our own lives. So whether it's in the economic, psychology, medical, you name it. I mean, insurance. They tax us enough already. Where do we go from here?
Well, we go the old Ron Paul route and not abolish the Federal Reserve, but have a competing agency and another competing agency.
Is that the Ron Paul route?
That's what he said in his book, isn't it?
Yeah, yeah.
You can't just, pull the rug out from underneath everybody. You have to have an alternative for them to jump to.
Yeah. I mean, and that's the truth. I mean, you really can't just end it all because that would be catastrophic. It would be better to wean ourselves off of the drug. It's just like drugs. I mean, what does a junkie do? They keep coming back for more. How do you stop a junkie from going back for more? You wean them off. You tell them, hey, this is actually harming you more. And so it would reinforcement. Yes. I mean, you have to gradually destroy the institutions in place that have caused this wreckage. We cannot just end the Fed. I know the whole libertarian idea is in the Fed, but we have to go the agarist route. And we have that. We do have the agarist route. We have the blockchain. And we have other alternatives as well. We have off-grid living. We have bartering with your neighbors, building relationships. We have gold and silver. Exactly. Copper. Head on down to your local coin shop. I would say stay away from them pawn shops. They'll rip you off. But head down to your coin shop. Go buy some coins, some silver and gold coins. Go get yourself a Liberty Seed dollar. I mean, start collecting. But anything that can get you off the control mechanisms that make you dependent upon a system that wants to annihilate you. Because that's really all it wants. It needs you desperate.
Just like Molyneux says, there's no getting ahead, there's only getting out. This is the way to get out. Just stop using the poison.
Beautifully said to end it on that note. So with that, let's start wrapping up. Andrew, any other concerns, comments, rebuttals on yourself? You want to say anything about your wonderful reading?
Yeah, I'm using like a 32-inch TV trying to read this, so you have to forgive me a little bit. Once I get a bigger monitor, it'll be a lot easier for me to read. But I've always been bad at reading out loud. So
Why were you reading off of the StreamYard when you could have just not cared that it was open?
Because that was the only way I could keep both screens up. I only have one screen.
Why couldn't you? Why does it matter? Put it yeah. I mean, you're still on camera, buddy.
Yeah.
Would have been easier to just be in the other tab and read. You'd be able to. You wouldn't have struggled as much. But anyways, before we get onto another tangent, anything else that you would like to lead off with and send us out?
If you're crazy enough to keep listening to me read, we're going to do Vices Are Not Crimes, A Vindication of Moral Liberty next. I love
Yep, we're gonna dive
wonderful.
right. Oh, it's gonna be awesome. It's gonna be awesome. I might read that.
Okay.
Yeah, but it's gonna be wonderful. I would suggest maybe let's not read it. Let's decipher it. Maybe you should read it off camera, Andrew.
I've got an audio public recording of it from LibriVox.
There you go. Listen to it when you're at work on your night shift. Take some notes.
Us, instead of me reading it.
Oh, no. Nonsense. We don't have to constantly read. I would actually say, let's be more prepared. Let's discuss it, because that's how Liberty book clubs are, man. Book clubs, you read and then you come and discuss. And I think that's what we need to do. That way we're not reading. People don't have to listen to our horrible reading skills and our slow American accents trying to read. So I would say
Listen,
tune in.
I'm up for retard of the year, okay? I'm going for the top dog.
You're not gonna win retard of the year. You're not taking my title, dude. I am WWE Undisputed Retard Champion.
Eugene?
Eugene, baby. Eugene. Speaking of that,
very
actually,
kind
go
of
so
them.
go subscribe to Eugene's. Go subscribe to Eugene's channel. It's very fun. It's one of my favorite YouTube channels. The behind the scenes with Eugene. That is hysterically awesome. Like Nick Densmore is like great. He's like the best. You know how they're all getting YouTube channels now? I think Nick Densmore's channel is a lot better, just because like everybody loves Eugene. So yeah, but I digress. Anyways, but like, subscribe, join in the conversation, add a comment. Let's boost these algorithms, get the message across, and we want to hear from you as well. So I also want to know, what do you think about Andrew's baldness? Should he get a new
Go
cat?
on, bald head. Says it right there in the Bible. Old Testament. Real wrath of God type stuff.
Let's get on out of here. He's getting crazy, man. That reading's turned him into a schizophrenic. So with that, live long and prosper.
Peace.
Have yourselves a great weekend. Peace.
Good evening, ladies and gentlemen. I'm Steve Roosevelt, and I'd like to welcome you to WCW Nitro.
You know, brother, you think you know what it takes to beat Hollywood Hogan once you climb in the ring and try out the largest arms in the world. Hollywood style.
You want to wrestle an inch more Ric Flair, you gotta be able to walk that out and style and profile. Woo!
You really think you're ready for a spin?
You really think you're ready for the Scorpion Deathlock? You think you're ready for a fatal encounter?
This is why they call me the total package. Do you have a pain threshold to withstand the butcher rack? Let's find out.
Hallo, hier ist Alex Wright. Wenn ihr High-Flying Wrestling Action wollt, Spinning Sidekick, Top Turnbuckle Dropkick, dann nehmt mich. Der Sieg ist euch sicher. Das Spreaker.
Oh yeah! Watch the flying elbow drop off the top rope. Not only beat people 1, 2, 3, but I hurt him real bad.
It only takes one of 1,000 holds. I think you're man enough for the challenge. You better be ready to wrestle, because you know, when you get in the ring with Eddie Guerrero, it's going to be high-flying and exciting.
Hey, anytime you feel froggy, man, I'll slap on the buzz killer, rip your shoulder right out of socket. Wolfpack style!
Hey, funky boy. Like there's a choice here? Good God! Pick the man with the plan. Pick DDP.
Hey, all you suckers out there, you wanna play the game? You wanna play with the big boy? Put your feet on the button, cause when you go down 110th Street, it's gonna be on like neck bone, sucker. This is Booker T from Harlem Heat, hardcore OG brother from 110th Street. If any of you punks got the guts to step up to the plate, push the button.
Yo, Chico, you selected Scott Hall? Get ready for a wild ride on the outside. Hey there! How'd you like to get power bomb? Come on, take me. I'm begging you, take me. Please take me.
You think you got the courage to step in the ring? I think you're gonna wind up in a snap neck with a choke slam.
Technical wrestler, high flyer, brawler. Don't matter what you consider yourself to be. When you're in the ring with the crippler, you're a loser.